Howdy, my friend, welcome to Squirrel On Charts, your number one resource for advanced trading education. Today I'm going to teach you how to trade major trend reversals correctly. Let's jump right in. When trading reversals, you have to be careful not to burn your fingers. Oftentimes, the market just continues doing what it already did. Meaning, you often end up with many losses in a row. And if the reversal finally happens, we either miss the trade completely or manage it badly. So here's how to do it the right way. First, let's talk about the three different phases of a trend reversal. In phase 1, the current trend shows some clear signs of weakness. For example, a strong pullback that breaks the trend line, or a very long sideways phase late in a trend. After this clear sign of weakness, the market usually tries to continue going in the trend direction. I often call this a trend continuation swing. In the last phase, the market tries to reverse again. Alright, let's look at a chart. On this chart you can see a strong bullish trend. However, at the end of the trend, the market made a strong pullback that went far below the trend line. Afterwards, the market tried to continue up. You can clearly see how this continuation swing starts off strong and quickly loses momentum. Furthermore, the continuation swing went all the way up to the last high and therefore, forming almost a double top. After the continuation swing formed the double top, the market quickly went into a bearish trend. Now that I have explained the common form of a trend reversal, let me now give you some tips on trading this pattern. Tip number 1 is measuring the strength of the continuation swing. If the continuation swing is unusually strong, there is a good chance the market might create a new high in a bullish trend, or a new low in a bearish trend. However, most often you can see that the continuation swing is much weaker compared to previous moves in the trend direction. Let's look at the chart on the left-hand side. The market strongly broke the trend line, but afterwards immediately tried to continue the trend. However, the continuation swing is very weak and quickly turns into a small sideways phase. We can also see that this continuation swing didn't manage to make a double top. The situation is quite similar on the right-hand chart. After breaking the trend line, the market tried to continue the trend. But the continuation swing was much weaker compared to the previous swings in the trend direction. After the continuation swing created a double bottom, the market quickly reversed into a bullish trend. Here I've got two additional examples. On the left-hand picture, you can see a fairly strong continuation swing that ended with a sell climax. This continuation swing was strong enough to create a new low in the bearish trend. The picture on the right-hand side shows a similar situation. The continuation swing was again quite strong. However, this time the market didn't manage to get even close to the previous high. In addition, you can see how the trend line acted as a resistance area for the continuation swing. Okay, let's talk about tip number 2. This one is all about placing a reasonable stop loss. There is nothing worse than taking a good trade and still losing money because of a bad stop loss. Most of us have probably experienced this before. In general, there are two different places for your stop loss that make the most sense. You can see both of them on the chart. A good stop loss can be at the last high, or slightly above it, in order to not get stopped out because of a double top. If you want the stop loss closer to the market, you can wait for major weakness in the continuation swing, and then place your stop loss closely above the high of the continuation swing. Let's quickly look at these two examples as well. The left-hand picture shows three reasonable places for your stop loss, depending on how close you want the stop to be. Remember, the closer the stop, the higher the risk-reward ratio, but also the chance of getting stopped out. The closest stop loss is placed at the beginning of the strong move downwards and through the trend line. The next stop is placed above the high of a pullback. And the furthest away stop loss is placed above the previous high of the bullish trend, and therefore leaving enough space for a possible double top. On the picture on the right-hand side, you can see that I would have placed the stop loss above the previous high. Given the strength of the continuation swing, it would be dangerous to place the stop loss too close to the market. This tip is something most traders don't like to hear. But if you want to become a professional trader, you must hear it. Trading trend reversals is always a low probability bet. The chance that a trend continues is always greater than a reversal. However, with the tips I already gave you, you can increase the chance of successfully trading reversals. But here's the important part. If you take low probability trades, you must offset it with a good risk-reward ratio. If the probability of success is at best 50%, then you cannot take a trade with a risk-reward ratio of 1. Instead, always aim at least for a ratio of 2 or maybe even higher. The chart below shows a trade with a risk-reward ratio of 2. Here's a reversal I've already shown you. If you would have entered the trade after the strong bearish candle at the end of the continuation swing, then a decent stop loss would have been the beginning of the bearish swing that broke the trend line. You can see where the take profit needs to be in order to get a risk-reward ratio of 2. I know, I only promised 3 tips in the video title. However, if you are still with me, let me give you a bonus. When trading major trend reversals, you can increase your chance if you look for additional price action patterns that occurred during the reversal. I already talked about double tops and bottoms that are formed by the continuation swing that continues the trend all the way to the last high or low. Sometimes you see the market forming triple tops or bottoms. And on the left-hand picture, you can see the continuation swing forming a wedge very late in the swing. This might greatly increase the chance of a reversal. Furthermore, it allows you to place a stop-loss closer to the market, which leads to a better risk-reward ratio. On the right-hand picture, the market also created a nice wedge with 3 moves. Afterwards, the market formed a double bottom before reversing the continuation swing, and therefore the complete trend. Okay friend, that's it for this video. If you want to make the leap from beginner to advanced trader, make sure to subscribe. Good luck on your journey. See you next time, bye.